Okay, Megawad team, welcome back to the channel. Thanks for tuning in. We have quite an exciting day today because not only have we had a weekly close above the 200-day moving average, and we'll talk about that in today's video, but we have also got our final giveaway winner that we'll be announcing at the end of the video. So stick around until the end of the video where we do that. Let's go ahead and talk about everything that's happened in the last week. Talk about the price action. Talk about the bear market status. Talk about where our price predictions are, short term, long term, mid term. What levels we need to break. We're going to do a full rundown today of absolutely everything you need. Before we do get started, head over to the pinned comment down below. Join our Telegram channel, get access to our crypto channel here on Telegram. We do daily updates, market analysis, and a whole range of more information. If you're interested in our VIP trading channel, you can get access to it by contacting me directly via Telegram. You can see our month-to-month profit. Last month, we did over 2,000%. We had 32 trades, 24 wins last month. Let's go ahead and dive right in. And firstly, I want to talk about what it actually means to close above the weekly. Close above the 200 on the weekly, because a lot of people have been talking, and we've been talking about the moving averages on this channel a lot. We did a video a few days ago explaining what a moving average is, why it's significant, why it's important, and what does it actually represent. Because a lot of people think moving averages are supports, resistances, important levels. We're going to talk about that. So what does it mean that we actually closed a weekly candle above the 200? So what it does mean in terms of the bear market, it means that the probability that Bitcoin will now make a new low, and a new low is it goes below that lowest point of 17,500. It means the probability of that has now significantly decreased. Okay, we can look back in history again. Every time we close a candle above the 200, there's a very, very low chance. And actually, we've never actually gone below the previous low. So according to historical structure, data, price action, we can say that this has, at a higher degree of probability, confirmed the fact that our prediction was correct and we did actually reach the bottom over here. Now, is that 100%? Absolutely not. There's no 100% certainty in trading. It is all probability. What it does say is there's a much greater probability that we have reached the bottom, and the probability that we can continue lower past this point. And that's the key word. Continue lower past this point has decreased. We can still come back down and retouch that trend line and go back up. That is still a possibility. It just means that the probability that we lose this 9-year trend line, go below this previous low, has significantly decreased. Okay, so another thing is, just because we close above the 200, it doesn't necessarily mean we're going to go into this parabolic uptrend now. We still have major supports and resistances above us that we do need to clear before we get these next moves up. And we'll talk about that in a second. What it does tell us, however, as well, is it shows that over the last period, so over the last 1 week period, it has shown significant strength in comparison to the average price over the previous 200 periods. Okay, so that tells us we are now in a uptrend. That doesn't mean we're out of the bear market. It doesn't mean we're out of the bear market. It means we're in a short-term uptrend. Whether the uptrend is sustained and continues into an actual breakout of the bear market, that is another question. That's something we'll look at in a second, all right? So that's what it means. I hope that everyone makes a little bit of understanding. I hope everyone understands now in a little bit more detail what that means, why it's significant, and what it doesn't tell you, what it tells you, all that kind of stuff. Let's take a look at some of these charts. And the big one is, we've broken over 200. Are we out of the bear market? And essentially, the real simple answer to that is no. We are still in a downtrend. We're still in the bear market, okay? The bottom over here is not the reversal point of the bear market, okay? We break the bear market when we break through this resistance zone. When we break this resistance zone, we are out of the bear market. We have flipped that massive 9-10 month long downtrend, however long it's been, and we are out of the bear market. That is when we are out of the bear market. That is when you can become macro bullish. Very important, very important. If we go back to this chart, I am not macro bullish, but this is the thing, it's very, very similar. But I expected the bottom of the bear market and a reversal point to occur at that level, at this $18,000 level, which means I expect the uptrend to initiate from that point. And that doesn't mean we're in a bull market, because until we break out of that macro downtrend, we break that bear market downtrend, we are not in a bull market, all right? Okay, so your stances on whether you're bullish or bearish, they can change based on the time horizon and time frame you're looking at. You can be short-term bullish, but macro bearish. You can be macro bearish, but short-term bullish. It really just depends on the time horizon. If we're taking a broader look at the market, we are still in a downtrend. And that's very, very evident. We are still in a downtrend. We're still in a bear market. We have potentially, and because of that weekly close, confirmed the fact that this was in fact the bottom. Now, obviously, there's still a small probability that it actually isn't the case when we continue downwards and lose this level. And obviously, this level will be our trigger to go to new lows. But there's a greater probability that the bottom is actually confirmed after that 200-day moving average break. Now, the short term, guys. The short term, we are still at a major resistance zone. And actually, let's go back to the daily chart. Really important we take a look at this. This horizontal resistance, this gray zone, we've circled about 50 times over here, is a major resistance zone that triggered that recent explosive price move on Bitcoin. And we can see we're testing this level again. And we talked about this in the Telegram channel. We said that just because we broke over and closed above the 200 moving average, it doesn't mean we're just going to blast past our major resistance, which is 23,800, and continue into this huge uptrend to 28,000. It doesn't mean that. It doesn't say that. That will occur once this level breaks. So if we get that daily open and close, and we need a daily open and close, which we haven't had, above this level, that will confirm that this resistance is broken. And then, as you can see by the VRPV, we have this massive low trading volume range, historical trading price action, very, very low, which we should fly through very easily to this bottom range of 16,500 to start off with, okay? So that is kind of how you should be playing it now. You should be aware that right now, in fact, we are at a major, major resistance, just as we were at a major, major support before. We have to remain cautious and neutral in this zone. Simple as that. There's really nothing else to say. I really don't have anything to say about that. That is just the reality of the fact. That is what it is. Taking a look at the macro again, we are out of the bear market when we break this trend. That is obvious. That is very plain and simple. There's no way to argue that that's an objective fact. This is the downtrend. We are out of the downtrend when we break out of this downtrend. Simple as that. Now, like I said, macro bullish can occur once you break this downtrend. That doesn't mean we're in a bull market. When are we in a bull market? Because just because we break a downtrend, it doesn't mean we're in a bull market. Just because we break a downtrend, it doesn't mean we're automatically now all of a sudden in a bull market. A bull market occurs when we break past $48,000, which represented this local major resistance top. We break past $48,000, we're very likely to continue to a new all-time high past that point, okay? I think I've defined the market and the market structures and price targets and triggers very, very well. There really isn't more to it than that. I think that's the complete argument. I think that's everything. That's all you really need to know in terms of, you know, where the price is heading, what can happen, and all that kind of good stuff. Let's take a look at the short term and do some little analysis on the short term. So obviously we had some recent volatility in the short term, and we formed this, I would say, sketchy bull flag. And I mean sketchy because, and I'll show you on Ethereum chart in a second, because we've had these, you know, wicks up and down and up and down. And this was just a liquidity grab. We can almost erase this from our chart, and then we would have this bull flag formation, right? And it's hard to say exactly what's going to happen here, but we could also see some kind of liquidity grab to the downside before we head up. And what I'm trying to say right now is, during this middle zone, while we're in this range, it's really important that you don't become overly short-term bullish or overly short-term bearish. More or less, you are just waiting for the price to make that move on the larger scale, all right? So you're looking on the short term, you're waiting for that daily. Once that daily breaks above or below, then you can switch your bias for the short term and expect lower targets. For example, if we lose a daily candle below this level here, which is about 22,600, 20,700, 22,700, we can expect the price to retrace back to the neckline, okay? And vice versa. If we do break above here on the daily, we do expect the price to move upwards to 26, okay? And while we're in this range, as you've seen, we do expect the price to flutter about up and down within this range with a lot of volatility, as we are currently seeing. And Ethereum's chart's a good one to show you. If we take a look at Ethereum chart right now, I'm going to go ahead and zoom out to the larger scale. I want to show an hourly. We have this bull flag formation over here, and we have the RSI to confirm that. We have a fake out on the RSI, and a fake out on the price. And we're back in that bull flag formation. So a lot is going on here, guys, and I think the best thing to do is remain cautious. And again, while we're in this sideways action, and I've been saying for the last few weeks, while we are in this sideways pattern, the best thing to do is to just remain aware of all possibilities. Now is not the time to be loading up Bitcoin. Now is not the time to be selling your Bitcoin. Now is the time to be waiting. If you wanted to buy Bitcoin, you should have listened to what we were saying down over here and bought Bitcoin down over here. And you can't say, oh, whale, we didn't give us enough warning. I've been telling you guys about $18,000 ever since we were way up over here. That was our buy point. We had plenty of opportunity and plenty of time to get in the market then. If you haven't got in the market then, now is not the time to do so. Buying at resistance is stupid. Wait for the break, wait for the move. Okay, let's take a look at the DXY. And the DXY, I've heard people say, you know, whale, we're in a when a descending channel, descending wedge or something on the bull flag on the DXY. I haven't actually personally taken a look, but let's take a look. Let's see if we can see it together. So, do I see a descending wedge? Now, visually, just from looking at this chart, I don't. However, let's go ahead and draw some trend lines in it so we can see. So, we're going to go ahead, and I really don't like doing this. I'm just going to go ahead and say I don't like to do, I don't know why my technical indicators aren't coming up. I don't like to do technical analysis on a DXY very often. And I think the only way I do like to do technical analysis on the DXY is when we're looking at major trigger zones. For example, on the 14-day chart, right? We had this major trigger of this downward trending 21-year symmetrical triangle resistance. Okay, that was when I used it. But right now, I don't like to do TA. And if we do look at the TA right now, we can see that we're coming back down underneath that 70 point on the RSI, which would confirm a sell signal for the DXY. The weakening in the DXY is very evident. If we go to a smaller time frame, some people say we're bullish or something because we have a downwards descending channel. Let's take a look. Let's see what we can see. We do have this point over here, which would act as a bottom. It's really hard to tell where exactly this top point would be on the RSI, on the DXY, something like that, more or less. And it looks like to me we're broken downwards from that descending wedge. Now, obviously, the 10-year government bond yields are decreasing. We've talked about this a lot, and I think I actually talked about it on this chart. Sorry, let me go up and take a look. And we talked about it a few weeks ago. Here we go. We talked about this a few weeks ago. And I'm going to go over it again because it is relevant. And we told you, I think 2 or 3 weeks ago, how relevant it is and why it's important, why everyone should be looking at it, because it's going to indicate wherever risk asset markets or whether asset markets in general, trading markets, move, because it represents the strength of the dollar. And the dollar drives the price, and the price is bound by the dollar. So it's all correlated. We'll talk about that in a second. But essentially, guys, a bond is an IOU. And if I lend money from you, I would write up an IOU, like I owe you this much, and give that to you. That's the bond, okay? So a bond is issued when an entity borrows money. So when you own a government bond, we wrote it up over here, you can see, it's essentially saying the government has borrowed money from the entity, and they're paid at maturity when the bond reaches maturity. So it might be a 10-year bond, a 15-year bond, a 5-year bond, whatever. In this instance, we're taking a 10-year bond. So 10-year bonds meaning 10 years until maturity. At that 10-year period, the entire amount is paid out, okay? So when you purchase a bond, you have your return on investment, and this is known as the yield. This is the percentage return, or the return that you get paid at certain points during the life cycle of the bond, okay? So it serves as an indicator. What this tells us, the yield, it serves as an indicator for the strength of the stock market, okay? And we already know that the stock market is to some degree a 0.7 correlation to the cryptocurrency market. And it's not because they're connected, it's because they're both connected to a common cause, a common trigger, which is systematic risk, okay? So crypto and stocks aren't connected. It's just that they're both impacted by systematic risk, which is controlled or also impacted by the dollar, okay? So we take a look at this and we say, okay, you know, bond yields are decreasing, and we'll go back to this chart in a second over here. Bond yields are decreasing. Over here, bond yields decrease in price, all right? Which means the bond yields over here, I'm gonna go and draw again, decrease. What does that happen to bond price? Bond prices increase. So rising yield is bullish for the dollar, and falling yield is bearish for the dollar. So if the yield is falling, guys, which it is currently, broken neckline, all right, it's falling and it will most likely continue to fall, it means that DXY is going to fall as well. Regardless of what the TA structure looks on the DXY, regardless if it looks like it's in a bull flag, whatever, break out of the pen, it doesn't matter. If the bond yields are falling, the DXY will fall. If the DXY falls, okay, if the DXY falls, money will flow back into assets, such as cryptocurrency, as we've explained here, okay? As we've also explained, I'm gonna zoom out, give me a second. As we've also explained many, many times on this chart over here, above us over here, the correlation or the flow of money between assets and the dollar when inflation and interest rate changes, okay? When speculative risk decreases, when systematic risk is altered, okay? The flow of money changes. Right now, it's suggesting the money is flowing from the dollar as the dollar is weakening into assets. This is why we are seeing the price rise for Bitcoin. This is why the price has gone up from $18,000 up to $24,500. All right, it's not random. Markets don't move randomly, not to this extent at least, okay? Not to a 36% gain, okay? It is all controlled by the dollar. It's all controlled by systematic risk. Really important. If you understand that, you understand the environment of which you're trading in, and then you can correctly identify the trend, and then you can trade with the trend more effectively and efficiently. This is how we're able to predict the bottom, okay? We saw all of this coming. I think I'm going to leave it there, guys. I think that's about everything I wanted to talk about. I think I covered everything pretty well. If you've got any questions about anything I've talked about, go ahead and leave them down below. We've got a collaboration video tomorrow with Fools of Crypto. You're probably thinking, Whale, if you're new to this channel, you're probably thinking, Whale, what the hell is this chart? What the hell is this chart? What the hell is this chart? Well, we're going to talk about all of this in a little bit more detail tomorrow in the collab, just to give everyone a little bit more of an understanding of what's going on. We'll talk a little bit more about this. We'll talk a little bit more about the DXY in tomorrow's video. Now, there is always a chance this stuff reverses. And TA is never always going to be the best when it comes to predicting, you know, trends of these economic indicators, because there are factors that can alter the trend outside of historic price action, okay? So if you got economic news coming out, that can alter the price with no regard to historical price action. But what it can tell you is it can tell you important levels in which the price needs to break above or hold. And I've said this a long time ago on this channel, and I'm going to say it again. It doesn't matter what the trigger is. When the price breaks past a certain strong resistance or loses a strong support, it will generally continue in that direction regardless of the news. Okay, so that's another really important thing to know. News can be a trigger event, but it's not always the be and all end all. And it's really, really relevant. If you take a look at the COVID-19 crash back in 2020, we crashed significantly as we lost to 34.34 on the RSI. The 34.34 on RSI, every single time in history that we've crossed that line on the Bitcoin chart, we saw a significant drop. And we talked about that on the Bitcoin chart months ago. It was like, I think we talked about that, you know, we're talking like 5 or 6 months ago before we saw this huge crash over here. We were talking about the 34.34. I can't remember if it was on the weekly or whatever, on the RSI. I think it was the weekly. The 34.34 on the RSI or something like that on the weekly or the monthly. I can't quite remember. You have to go back and watch the video. I'll have to find out for you guys in another video. Every single time we lost that level, we saw like a 56% drop on Bitcoin, 40% drop on Bitcoin. The biggest drops we've seen on Bitcoin came after we lost the 34.34 on the RSI, because what that tells us is that momentum and velocity are very significant when it comes to price moving. More significant than what you actually think. Momentum and velocity is one of the biggest reasons price moves in markets. So if you can trade with the momentum, if you can get the velocity on your side and you have that break in the trend, the price will generally move in a direction, especially if you've got a low trading volume range. Now, actually, this is going into a longer video. There's one more thing I want to talk about. And this is what a member asked me the other day. He said, Whale, why do so many people talk about trading volume and they say we're going to go down because trading volume is decreasing, and then they're wrong? And I think this is really important, because trading volume and historical trading resistance or volume in a range is very important. Volume itself, if we take a look at volume itself really doesn't mean much without context. And if we go ahead and apply context, so applying historical price action, and historical price action and a velocity momentum is represented as well by our VPVR or VRPV. If we're going in a uptrend with low trading volume through a very low resistance range, even if the trading volume is decreasing, we can continue in that uptrend because historically it's a very low resistance range. It doesn't require a lot of volume to push through that range, and vice versa when you go into heavy resistance. And I think a lot of analysts out there get tricked, they get fooled. They look at upper resistance, we're going in an uptrend, we're going through a low historical trading resistance range, and our volume's decreasing. Therefore, we're going to crash immediately. And that is almost taking half of the picture and not looking at the other half of the picture and pretending like you know what the whole picture looks like. It just isn't possible. You have to take a look at the broader concepts. Anyway, we're going to go and talk about Bitget. We're going to talk about become a trader, guys. So hit those up. And after that, we're going to go ahead and announce our giveaway winner, our final giveaway winner for our 3 weeks of giveaways. The first week we had Muhammad, congratulations. The second week we had Mark, and the third week we'll find out in a second. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one. Okay, guys, we're going to do our giveaway winner for the video. Now, unfortunately, I have noticed on this recent video and on the last few videos, I've had a bunch of fake accounts or bot accounts or potentially created accounts commenting on my videos to get themselves an unfair advantage to be the random winner of the video. For this reason, I unfortunately will not be announcing the winner today. I won't be selecting a random winner today. What I will be doing instead, because I want to make it as fair as possible with everyone. I feel like everyone deserves a fair shot. At the end of the day, if someone's created a bot account to make 50 different accounts to comment short little phrases on my video to get themselves an unfair advantage to win, in my eyes, what that is just attempting to steal money out of my pocket. I'm the one providing this giveaway winning. I'm the one providing the money. At the end of the day, I want the money to go to someone who's genuinely been commenting, genuinely paying attention to the channel, and genuinely following. So To fix this solution, what I'm going to do is I'm going to not announce when I'm going to do the next giveaway. It's going to be random. I'm going to announce it at any point in time. It could be in a week, it could be in 2 weeks, it could be in 3 weeks. But at some point in time, I will just randomly choose a video and randomly pick a winner via that random number generator. I think that's the only way to go around it, is to bleed out whoever's bot commenting, just bleed the bots out, give it time, let them fade away, and then get the video up with the winner. Okay, thanks for understanding. I'm sorry it's come to this, but I don't feel comfortable doing a giveaway where potentially there's an individual who's got a 40% chance of winning and everyone else is on the back burner. Everyone deserves an equal chance. Everyone deserves a fair chance, and I deserve the ability to provide the money or the giveaway money to someone who actually earned it. Okay, thanks for watching the video, guys. I'll catch you tomorrow.